We got to run. We're going to do some trading on it. Scott Bauer is with us at the SIBO. He's the CEO of Prosper Trading Academy. Mike Keeley says if this thing breaks, Scott, it looks like it's got a ways to run to the upside. You want to get exposure and wait for Snap to start really bringing home the bacon?
All right, so I definitely agree with him. If it breaks, and 1780-ish or so is some major resistance. If it breaks, yeah, there's a lot of dead space. There's a lot of air for this thing to run. Couple things, though, Oliver. Number one, yesterday and actually all this week, there's been a massive amount of call buying. But what really stood out to me is yesterday, there was a buyer of over 20,000 of the 17 calls that expire tomorrow for a dime or less. Something fishy there. I don't like it. I don't like it at all. That being said, this is a great pop-up on what we've seen on the upgrade here. I'm taking the opposite side here. I don't want to be short Snap for the long run because it is completely ripe to be a takeout candidate at some point, whether it's a month from now, 6 months from now. I don't want to be shorted. However, as a trade, based on this run up today and some over exuberance that I see, I'm buying a put spread. And I know that's, right in the face of what everybody is saying on the upside potential here.
I like it. Sticking the neck out.
Going out a few weeks. Exactly. Going out a few weeks. And I'm picking the January 31st expiration because that's before earnings. They have earnings, I believe, on February 4th. So I want something that's just before earnings. I'm buying a really cheap put spread, the 17.16. It's a dollar wide. I can do that for 20 to 25 cents, somewhere in that area. It's really cheap. I'm not saying Snap's not going up. I'm just looking for some sort of retracement based on this upgrade, based on the fact that it's coming up to significant resistance.
So you're selling the 16 then? Is that right, Scott? And you're buying the 17?
I am. I'm buying the 17, selling the 16. So this thing can go to $1. I'm paying 20 or 25 cents. That's my exposure. It's a really, really cheap shot on a technical play in Snap that we just get some sort of retracement back to, off of these resistance levels.
Interesting. Okay. If we can pull up the 3-year chart for Snap, I think we're going to see, we were looking at Mike's as well with the potential breakage, but that was a shorter term one.
Yep.
To your point, Scott, if they do get rejected from $18, or even if they go through it, it's basically you got to go $21 is where you start to see the previous high from 2018. But it does, to your point here, look like an area where if there's people that have been riding a 200% run off the low, then hey, maybe take a little off the table and you see some volatility around this level.
And that's exactly what I'm looking at. And I like buying a put spread as opposed to selling calls or selling a call spread for the reason, Oliver, that at any point this thing could be a takeout. So I don't want to have, necessarily that upside exposure of being short calls. I'd rather buy a cheap put spread and I know what my risk is. I know what my investment is. If it doesn't work out, it doesn't work out. But I'm looking at that technical level of 1780-ish, 1790 is some major resistance here.
Yeah, all right. Nice work, Scott Bauer. I appreciate the update joining us from the SIBO. All right, nice and quiet down there with Fix at 13. Scott, appreciate the Snapchat. All right, there you go. Scott's the CEO of Prosper Trading Academy.